Hello, ladies and gentlemen, and welcome to today's Power Options presentation. Today we want to talk about the best tools to find new trades. Now, of course, I'm biased. I'm going to feel that Power Options are the best tools to find new trades. You're welcome, of course, to argue that with me during today's presentation, but I want to talk about why I feel that the Power Options tools are the best way to find new trades. Whether you know what you're looking for, you know a strategy, and you have a trading plan. Whether you're not sure of a particular strategy, but you know a stock that you're interested in trading, or of course if you're just getting started in options and you're not sure what strategy is the best or what strategy to look for. A quick introduction. The Power Options tools is designed as a one-stop shop for options investors. These tools were originally created by Ernie Zarrenner back in 1997 to trade his personal account, but over the last 20 years we've expanded the available tools and the available analysis tools and tracking tools based on customer feedback and of course new securities and new options, we should say, that were made available in the market. For those of you that don't know me, my name is Mike Chupka. I am the Director of Education here at Power Options. I've been trading options and been teaching investors about options and how to use the Power Options tools since about 2001, so for the past about 16 years. I've done multiple strategies and I've seen multiple services for options traders and stock traders as well. Now, you may use multiple services. Of course, options investors, we're considered the most savvy investors across the markets because we don't need to just analyze the stock. We also need to analyze the option criteria. Whether you're bullish on a stock, neutral on an index or ETF, or bearish on a security, we want to find a position that matches the sentiment, but at the same time has to have the premium we want, the risk level we're comfortable with, the return that matches our trading plan. We want to make sure that the option has good liquidity. Likely, it has to match our Greeks and our implied volatility as well. Maybe if we're selling, sure, you want to look for maybe a high implied volatility, but you don't want to go too high because you know, of course, that something with too high of an implied volatility is going to mean that there's a likely case of something going against you, something unexpected in the market, or a known event which would cause the stock to swing wildly one direction or the other. We, of course, also need to analyze the stock criteria as well, but there's different ways to do that. And of course, in addition to that, there's different ways that you can find a bullish stock even in a bearish market, or reverse, a bearish stock in a bullish market, but the structure of the trade you're interested in has to match the sentiment. If we feel that a particular stock, let's say Apple, is going to be trading maybe up 1 or 2% in the next 12 to 14 days, well, naturally, we don't want to buy a long call, even if it's 1 month out or 1 week out, because that's probably not going to give us a good return. A small move like that is something that's more beneficial for a bull put credit spread, a covered call position, maybe a diagonal spread if you're also longer term bullish going out 3 to 4 months as opposed to the next 12 or 15 days. But that's why we have to analyze the stock. We just don't want a stock that's moving up. We need a stock that's moving up to match the sentiment of the trade we're looking for. And of course, in addition to that, we need to look out for the what-ifs. We need to know if something with a similar stock price and similar fundamentals on a stock, well, one option that's at the money, let's say a 50 strike call on a $51 stock is priced at $2, and the other one's priced at $6. Well, we know that something's going on with that second stock that may cause the stock to swing wildly one direction or the other. Although the premium looks good, we could get hurt very well. Now, over the years that I've worked with Power Options, and I've worked with other services in the industry and brokerage houses as well, from Options Express to Trade Monster, who was acquired by Options House and so forth, I know that there are many services out there. I know that there are free services out there, and there's ways to analyze options data for just using a basic option chain on Yahoo Finance or something along those lines. But some services, even ones offered for free at your broker, will allow you to scan for stock criteria. You can put in a dozen or so fundamental or technical data for stocks, and they'll spit out a list of the top 20 or 30 stocks that match that criteria. And then you maybe have to go look at a strategy chain to see, okay, well, here's the stocks that match this bullish criteria I was looking for. Let me take a look at their buy rate chain for this stock. Nothing really matches what I want, so let me go to stock number 2 on their list. Let me look at their buy rate chain. Or you look at a straddle chain or a spread chain to try to analyze it. So you're kind of going back and forth between these two. Others, you can look at the strategy chain directly if you know the stock, but the criteria might not match what you're looking for. I go to my broker, I go to Apple, I click on a spread chain, let's say, a bull put credit spread, and I see that there's nothing there that matches the return or the delta or the probability that I want. So I got to go back to square one and now try to find a new stock. Now, other services are out there that offer you preset searches for maybe 3 or 4 different strategies. You have a listing of selected covered call criteria where one is labeled as high return, one is labeled as safety, but it's limited to the search criteria that they set. Where a lot of those services show you that you can pick and choose maybe to adjust 5 or 6 different criteria, but you're only looking at a minimized stock list that they prefer. Right? So you're not looking at the universe of options. You are using a limited universe based on their ideas, but it doesn't give you the full flexibility. Now, as an options trader myself, when I'm looking for a new position in a given strategy in my portfolio, or I've recently seen a stock in the news that interests me and I think has some potential, maybe a new stock that just came out in a particular sector that looks like they have a strong idea. But when I'm looking for a new position, I want the most quality, quantity, and flexibility. Not just in the number of trades I see, but in the means to find those trades. If I'm looking for a new position, let's say a diagonal spread, which I trade with about 10 to 15% of my allocated capital for options investing, I'm going to want to identify stocks that match my trade sentiment. So for a diagonal spread, I'm going to want to look for a stock that has shown recent growth, maybe trading above its 20-day moving average in the short term, maybe has a strong MACD profile, but also has shown strength over the longer term. Because I'm expecting maybe a 1 to 2% gain in the stock in the short term, so I don't maybe risk getting assigned on my short call of the diagonal spread, but I'm buying an option that's 3 or 4 months out because I'm looking for extended growth and continue to write against it. Of course, we want to maximize return, but we want to limit the risk, not just in the structure of the trade, which is important, but also in finding a reasonable trade that's not too out of bounds, or something, as we mentioned, that may show so high of a premium because the implied volatility is so high that it could swing against us because it was known that some event's coming up. But I'd prefer, and I use, of course, a tool that does all of that at the same time. Rather than getting a list of stocks, I know some of you may subscribe to VectorVest, where you get a list of particular stocks that either match your criteria or their presets, and then you look for positions against those stocks, whether you're bullish or bearish, and you try to compare them all at once. Okay? I'd rather have a tool that does it all at the same time, where I can search either by a strategy, where the stock and option criteria match directly, or if I know a stock, I can look directly at multiple strategies at the same time to see which one offers the risk reward I want. Now, I have many questions over the last 15 to 16 years here at PowerOptions of what investors are looking for, what are they doing. One of the most common questions I get over time, some of you are maybe familiar with credit spreads, whether you're doing a bull put or a bear call, for example. Let's take a bull put. The stock's trading at 50, and I might be considering selling a 47.5 put that's out of the money and buying a 45. I might get a 30-cent net credit, but I'm risking 220. It's a 7-to-1 risk-reward ratio. I might probably have about a 75% probability of that spread working out for me. But one loss means I wipe out 7 previous gains. So how can you be more successful with credit spreads? Well, the question I get is I'm looking for credit spreads that have closer to a 1-to-1 risk-reward ratio, but with a 90% probability of expiring. All right, but everything, as we know, works hand in hand. A 1-to-1 risk on a credit spread means you're taking in a 50-cent net credit on maybe a 1-point spread. So the maximum loss, if it moves against you, is only 50 cents. Well, the only way to get that kind of structure, if our stock was trading at 50, would maybe be to sell the in-the-money 52.5 put and buy the out-of-the-money 47.5. Or in this case, for a $1 risk, I should say, is maybe selling the 51 and buying the 50. Okay, but this means you only have a 40% probability. So you can't have everything. But if that trade exists, our tools will be able to find it. Now, more importantly, we covered this last week, actually, during our Friday open discussion presentation. One of the customers online said that he wants to find covered calls that are 3 to 4 months out in time on high dividend stocks with at least a 4% premium, meaning a 4% return if assigned without including the dividend, but still looking for a dividend of maybe 6% or more. With our tools, in the covered call search, we did that in just 5 clicks, and it took about 20 seconds. Okay? And that's not 20 seconds to search for the positions, that's 20 seconds to input the criteria that he was looking for. Another question that comes in commonly, more reasonable trade I should say, is someone looking to find weekly credit spreads with a 90% probability, but still a reasonable credit, maybe 15 cents or more on the position. Well, in just about 5 clicks, we were able to show that and narrow the entire choices down to about 25 to 30 out of all, 4,500 optionable stocks, indexes, and ETFs. So doing them both at the same time. Now, this is very specific, and this is very limited, because with just these criteria, it's very specialized, and those searches were narrowed instantly. Other investors may just want to look at a position one stock at a time or not know at all what they're looking for, and that's no problem, because we offer a variety of signature tools for each strategy to help you save time. If you're bullish on a stock, we offer a long option finder where you can instantly find which calls would give you the best return if the stock hits your expectations. We've got spread chains which easily allow you to view parity trades between bull puts and bull call debits, for example, to see which one gives you the best bang for the buck. And of course, we do offer preset criteria, searches that you can use as a stepping stone to create your own personal search based on our years of experience, and there's different preset searches in each of the 23 plus option strategies that we support. So we don't focus, as some sites do, on just being able to sell premium. Covered calls, which we know are flawed to the downside but can be a successful trading venue, or cash secured naked puts, or even spread positions. We offer the full gambit of if you're doing multi-leg spreads, straddles, strangles, just option buying, diagonals or horizontals, and more. And of course, for those of you that are still not sure, we do offer picks of the day in the most popular strategies, covered calls and naked puts, where these have been tested and you can see the results over a certain time period of testing and beyond. All right, so that's why these tools are powerful, but now we want to take a look at why and how to use these tools and why I feel they're the best for you. What we're going to cover is reviewing the tools to find new positions one stock at a time, the features on the search tool to find positions that match a specific requirement, or even using our preset searches as a stepping stone, how to quickly navigate the various filters, the quantity of available criteria for you to use to find just the trades that match your personal risk-reward tolerance and your trading plan. And of course, we'll take a quick glance at various strategies and then review general tips on using the search and creating a search from scratch as well. Now, before we go any further, I just want to launch a quick poll here. I want to see what strategies, you're currently trading, or maybe you're currently researching. So are you mainly looking at covered calls, naked put positions. They're parity trades. They have some similarities, similar risk, of course, but also similar return. Are you looking at protective positions? Mostly married puts, collar positions as well. Talked a lot about the vertical spreads, okay? We talk about bull put credit spreads, bear calls, the debit spread parities as well. Maybe even iron condors would fit in there also, excuse me. Now, do you like to buy options? Buying calls, buying puts, speculating on a market movement. Maybe you're doing straddles or strangles around earnings, or maybe you're looking at calendar spreads. All right, so we've got over 75% of our audience has voted. Poll's been open for about 45 seconds. I'm going to close it at about a minute. So if you haven't voted yet, I encourage you to do so. All right, ladies and gentlemen, let me go ahead and close the poll and let me share the results with everyone. Okay, 40% of you are doing covered calls and naked puts. That looks like the highest of today's range. 30% of you are doing protected positions, and 20% are doing vertical spreads, and of course 10% of you are doing option buying. Fantastic. It doesn't surprise me that covered calls and naked puts are on the top. Real quick, I just had a conversation yesterday with a customer who's maybe mostly a spread trader, and I told him that covered calls typically come up as the top of the poll, and he said, why? I don't understand why covered calls would be so high. It's kind of limited, and you could do more with spreads, and that may be true. But real quick, the reason why covered calls are usually the most popular option strategy is that new investors who apply to trade options might only get level 1 trading. And at a lot of older brokers, that means you're just allowed to do covered calls. You may have to go level 2 to be able to buy calls and buy puts. But the customer I was talking to, he's focusing on a $40,000 account for spread trading, but he said he had trading options with over 100,000. I asked him what's with the other 60,000. He's of course holding stocks that he's had for years and just selling calls against them for a dividend-like income. He doesn't consider himself a covered call trader, but he's still using covered calls in his portfolio, even though he's focusing on spreads and moving to diagonal spreads as well. But in any case, no problem. What we're going to do now, ladies and gentlemen, is I'm going to navigate over to the PowerOptions suite of tools, and we're going to take a look at how exactly these tools are the best at finding new trades, whether you are looking one stock at a time or whether you have a set criteria that you want to look for, or you just don't know what you're looking to trade right now. All right. So we have our selection here for our available strategies. As I mentioned, up at the top of our list here, we see about 7 strategies listed. We do support over 23 of the commonly used option strategies. So on your account, just click on the Other Strategies tab. You see all of the available strategies on the left. You can customize them based on what you want to look for here. One thing I don't have in my list right now was the 10% of you who said that you were doing long call buying. Right? You're buying calls or buying puts. So let me go ahead and take out calendar calls. I'm going to go ahead and add long call into our menu as well. Let's just go ahead and save that configuration. All right. Let's start from scratch. You're interested in trading options. You know of a stock that you're tracking, you might want to trade, something that was recommended to you, maybe by a business partner, someone at your work, relative, friend, okay? And you're bullish on this stock, but you know there are multiple strategies out there. You're approved to do covered calls, you're approved to buy calls, maybe you're even approved to do spreads at level 3 trading, okay? But you don't know which one is going to give you the return you want. Okay? Well, one of our signature tools that's listed, and it's really easy to access, is at the top of the page. I'm just going to type in Apple for our example. And I'm going to click on what's called the search summary on the quick tool links here. And what the search summary tool allows us to do is see examples of bullish or bearish trades depending on your selection. And you can quickly compare the return and downside protection for doing covered calls, calendar call spread, a calendar put, or more. Now, I've selected all. That's typically not what you want to do. What we'd want to do in this one, we are bullish, let's say. So let me go ahead and clear all of those out on this simple tool, and then let's go ahead and select the bullish. So it's automatically going to select covered call, bullish debit spread, bullish credit spread, a collar, buying a call, diagonal spread, and more. Okay, so let's go ahead and take a look at our standard July expiration. And now we see the covered calls for standard July. Max return here of 2.3% and 2.6% with some downside protection. I can compare that now to the returns on the calendar spreads or on the bull put credit spreads as well, and so forth. So this is a quick tool that just allows you to view the returns and potential for different strategies. And if you're only interested in 3 or 4, let's say you're interested in maybe looking at covered calls, maybe bull put credit spread, you're focusing on premium, maybe a collar and a naked put, we'll just uncheck those that don't match, customize it for our needs, and then click submit. Okay, so now I've got the returns for covered calls, bull puts, naked puts, and collars. I can compare them on one page. Right? But let's say 40% of you, you're interested in covered calls and naked puts, and you're interested in a particular stock. Well, there are various tools that we offer for covered calls and naked puts to find positions one stock at a time. We do offer a quick find tool. It simply allows you to put in the stock you're interested in and the number of shares, and it would give you a monetary breakdown of what you can expect for selling a in the money, at the money, and out of the money call right now. Compare the max return to the downside protection. But I prefer to use the option chain personally when looking for covered calls. All right, now right now, you're probably thinking, okay, where is this going? I already have an option chain. I can get an option chain at Yahoo Finance. I can get an option chain anywhere. All right, well, let's go to the covered call option chain here on PowerOptions. Anytime you're looking at a call chain, for those of you doing covered calls, although you see here a wide array of different criteria, everything from just the bid and ask, the Black-Scholes, I can put in Black-Scholes ratio and IV ratio to see if it's undervalued or overvalued, volume, open interest, all things you'd expect, implied volatility, delta, probability, time value, and more. But the one thing that this tool offers that most tools, even at your broker, probably don't, is that we show you the return columns for a covered call trade right on this screen. Okay? So I can quickly compare if I want to go 2 weeks out in time or to next week's expiration. Go ahead and customize that. Let's go to June 30th. Okay, I can see immediately with the stock at 145.56. If I was to trade the slightly in the money 145 call in this position for 9 days out, we'd get about a 1% return for a 9-day trade with a 1.3% downside protection, with about a 55% probability of being assigned. Right away I can compare that to, well, what if I'm a little bit more bullish? I go out of the money to the 146, slightly higher return for a 9-day trade, a little bit less downside, and of course a little bit lower probability. So right away I can see which covered calls make sense. I don't want to go too deep in the money, even though I'm getting a high premium. It's only a 0.2% return. But if that matches your trading plan, 2% yield, of course, with a high probability of assignment for a 9-day trade, that's where you'd want to go. Or if you're looking for a lower probability of being assigned because you want to collect a dividend-like income on a week-by-week basis, well, you can see right here, we could easily choose the out-of-the-money ones with a 29 and 22% probability below, still collect 68 cents or 44 cents against the position, about 0.3 to 0.5%, so we can quickly fine-tune that and narrow that down to what we want. In addition to that, those of you doing naked puts, if I'm in a chain for the puts, I can customize it to show the naked yield of selling it as a cash secured naked put, the percent break even, annualized naked yield as well, plus probability and any Greeks that you want. On any search page, our option chain, the searches that we're going to look at in a moment, some of our other tools, we can click on Choose Columns. And this will allow you to customize your chain view for the call or for the put. Things of the option high, option low, last trade time, last price as well. All that you need for implied volatility ranges, all of your Greeks, of course. Other things for the probability above and below, Black-Scholes ratios, is it overvalued or undervalued, the annualized returns as well. So you can set this structure any way you want for your data needs. The flexibility that we look for, whether you're looking for one stock at a time or looking for new positions across the universe of options. All right, now, of course, those of you that are doing the collar spreads or the married put, rather than use the option chain to see the structure of that kind of setup, in every strategy we do offer a search by symbol tool. So if I'm looking to open a new married put on Apple, well, I want to go 5 months or so out in time, and I want a controlled risk that makes sense. Very simple interface. Just go to the married put tab, go to search by symbol, go to more results, and I'm going to leave all expirations open for the time being. And this gives me a rundown of all of the available positions and expirations. Maybe I want to go out to October, probably November. Did this to see which series were available. So November is about 5 months out in time, 149 days to expiration. So now that I know that, I'll tell the system just find me the November married put combinations. Here's our structure, the cost of our options with, of course, the maximum risk. So based on my expectations going forward, what risk I'm willing to take on the position. And of course, we can show different columns here for the stock and for the option, just as we did before. I go to Choose Columns now. And now, when you're looking at any specific strategy on a search by symbol of the search, you can check any columns that you want to see specifically for your stock analysis and your options analysis all on the same page. So when you look for a new position, it's customized to your particular view. In addition to that, for these two strategies, the insurance tool, if you have a stock you're holding that's moved up and you want to evaluate a potential collar or married put position to lock in the unrealized gain, we'll use that insurance tool. So let's say you own Apple, you've been trading it maybe as a covered call, you've knocked your cost basis down over time to, let's say, 130 or so, but you're worried that there might be a market pullback. Well, I can simply look at a married put again. We can go out to September or November, for example. And we have an unrealized gain of 12%. We can see how much of our locked-in profit we could have right now, guaranteed return. But then again, I can also say, well, show me the July calls against this. Oop. Sorry about that. There we go. So now I can look at some August positions against this and see what my new guaranteed profit is or my new locked-in profit is on the position, as well as the potential return also. So one stock at a time. For protected positions under collar or married put, we'll use the search by symbol. If you have an unrealized gain, you can use the insurance tool to see how it's locked in. All right. Now, for credit spreads, vertical positions, and more, you're interested in a bullish spread on Apple. All right, so you probably consider bull put credit. Now, there is a search by symbol tool here, but a more powerful tool to use is what we call the spread chain. Now, the advantage of the spread chain is I can look one stock at a time for new positions. But I can customize it based on my specific requirements. So I'm looking out maybe 9 days to June 30th or maybe 14 days out to July 7th, about 16 days out in time, 1 week or 2 week out spreads. And I know they have dollar strike differences, so let's say I want a spread width of 2. You can set that if you have a 5-point spread width requirement for your structure and your trading plan. You want a minimum net credit for your 1 week or 2 week out trade, let's say of 20 cents. And at the same time, you're going to want a probability above of at least 75%. And let's change our return to 5%. Okay? I'm just going to put 0 here as well. So now I'm narrowing down the potential spreads. Not only just look at all spread combinations, which you might see on other services, a variety of ones that just extend out all the way down to ones that are too deep in the money that offer only 1 cent of net credit, or ones that are out of the money that don't have the probability you want. Here, one stock at a time, we'll go to July 7th. I only want to see bull put credit spreads that offer 75% probability, 5% return, 20 cent net credit on 2-point strike differences. Okay, so let's go ahead and submit that. There's only 2. Now in this particular view, I selected to look at the put credit and call debit parity. Why? Well, because if I'm interested in doing a bull put on this particular stock, I have my basic requirements for range out of the money or probability. I want to see if the parity trade, the debit spread, offers a higher return to the credit spread because they have the same risk-reward profile. Let's take a look here. Here's our 141, 139 bull put. See the midpoint here, we could get 68 cents on the 141 put, pay midpoint at 42 cents for the 139. Getting a 26 cent net credit or 14.6% return for a 16-day trade. That's not too bad at all. Well, that's over here in our parity view on our bull put. I see my midpoint prices here and of course my return. But over here I'm looking at the bull call debit with the same exact strikes which would have the same risk reward. The max profit if the stock's above 141, max loss if the stock is below 139. We have the same probability, but if this offered a 15.5 or let's say a 16% return, which it doesn't, it's lower, it's only at 12.4, but I might be more inclined at this point to go with the bull call debit. But in this case, I'm staying with the bull put. So what have I done here? I took a stock that I knew, immediately making 3 or 4 changes, found just the positions that match my trading plan for a spread on this position, and I, on the same page, compared it instantly to the parity trade. I can change other dates if I only want to go 9 days out. There's only one that's there, the 142, 140, but that would be a 9-day trade for a potential of a 14.3% return. Still with a 79% probability, I may be inclined to go shorter term now rather than the longer term, but that again is going to depend on your expectation. And you had already set your expectation because you knew coming in you were looking for a spread position, a buy right, or a naked put on this particular stock. All right, now 10% of you that are doing call buying or put buying, one stock at a time. Let's take Apple, continue with this example. Let's say I'm a little bit bullish, all right, and I'm expecting maybe a 10% gain on this stock. Now it's not a lot, you know, $1.50, $1.60 movement or so. Or, I'm sorry, 14-point movement there. You know, we're looking for a 10% movement, so $15 movement, let's call it, in the next 30 days. So that would put our stock at about 160. So under long call or under our signature tools, I'd go to long option finder. We're going to say Apple here. My expected price of the stock is 160. 10% move, about $15 or so in the next 30 days. So sometime around before July expiration. And of course, as you know, if you're buying calls, you're using that as part of your portfolio, as part of your strategy plan, you're probably allocating a certain amount of your portfolio to buying calls. Okay, so let's just put in I'm interested in investing $1,500. Or you could even put $500. Let's go ahead and lower it down. $500 on calls on Apple. Small, little cost there, but my expectation based on what you've researched or analyzed, or again, maybe you follow a service that picked a target for Apple of 160 before July expiration, right? In that instant that we just saw, what this tool did is it went out and grabbed all of the available call options on Apple for all expirations. It took the current price of the options and calculated what those options would theoretically be worth if the stock hit our target price of 160 within the next 30 days. And it shows us only those calls, which shows us the top calls that would give us the best return. In this case, with the stock at 145, the 155 calls on Apple for the standard July 21st expiration are priced at 38 cents. I can afford to buy 12 contracts based on the $500 I entered. And if the stock hits our target price on our target date, well, this is about accurate, isn't it? Well, that would be about $5 of intrinsic value with 1 day to expiration. So with that 15-point movement, we could take $500 and potentially make close to $6,000. Right? Now, this isn't saying that that projection's going to happen, but this again is one stock at a time. You've already decided. And when you decide to buy a call on a stock, it's because you have a projection that's going to move up a certain percentage by a certain time frame. And rather than going to the option chain at your broker, maybe going to a Black-Scholes pricing model and seeing what would happen if this stock hit this price in 14 days and you bought the 9-day out option or the 10-day out option and running it for the 145 strike, then the 150 strike, then seeing the 160 strike and so forth, this tool does it all for you. You put in what your target price is and we'll show you which option would give you the best return. Of course, it works for puts as well. What if I expected a 10% drop? I thought Apple was going to be trading at 130. Here we'll probably see the 140 call or the 136 put, it looks like, excuse me, would offer the highest return based on our projections going forward. All right. So those for the strategies that you all selected. Those are the signature tools or the single tools that we'd want to use looking for new positions one stock at a time. I'd suggest using the option chain so you can see the return for a covered call shown to you rather than calculating it yourself. It's an extra feature that you won't find on free services. And of course, for selling cash secured naked puts, the proper criteria you could select on the chain one stock at a time would be the naked yield, percent to break even, probability as well, and then of course you can select all of your Greeks. Those of you doing credit spreads, take a look at the spread chain. It's using the midpoint for the best calculation. And then married puts, of course, and collars, you want to look at the insurance tool or the search by symbol, long calls, the long option finder. All right, let's get right down to it. You're interested in trading covered calls. You just started maybe taking a course, you just recently read a book, or even if you've been trading covered calls for years. You don't know necessarily what you want to look for. What you have been doing hasn't been working for you. You're not seeing the returns that you want. You want to look for positions that have a specific return requirement, or you're not sure what stocks to look for. No problem. Our patented search and our sample searches view will give you default settings that you can use as a stepping stone to create your own personal search. Underneath the covered call, you'll see things as broker and advisor recommended. It's a themed search. It's only looking at stocks that are part of a 5-star recommended buy with good fundamentals and technicals, but still looking for a reasonable return, short or long term. You know that you want to trade stocks that pay a dividend and sell covered calls against them. You could use the default searches here as well. If you're in a smaller size portfolio, or maybe you're just starting out with covered calls and you're only allocating a small amount, the 25 report shows you covered calls with stocks under $25 per share. To start out small, build your account. It's a good place to start. And then, of course, if you're only interested in weeklies, you can screen for weeklies at any time. There's also default searches you can use in the search tool to help you get going. But let's say that you have a specific criteria. I'm just going to go to the main search right now. And when I click on the search, this is something we created during a webinar back on May 25th. I see the trade results here, and again, you can customize it any way you want to on the data field by using the Choose Columns feature. It's not a set table. You can open that up depending on what you like to see immediately to analyze your positions. anytime you open a search, you can immediately see what criteria are being used all at the same time. So again, rather than finding a stock list on your broker that matches certain fundamentals or technicals, then picking a stock and going to a buy right chain or something along those lines, I can put in specifically the criteria that I want. This was a weekly search looking less than 8 days out in time, minimum return of 0.5%, option bid price greater than 20 cents, still with a 65% probability, some volume and open interest. But then at the same time, we put in technicals to look for stocks trading in an uptrend, stocks with a reasonable volume, and of course we can choose to avoid earnings between now and expiration, or specifically search for earnings between now and expiration, what I might do on a long straddle search, or if you're buying a call, speculating on that as well. Okay? But remember what I said, here we are in the search. We have a variety of default searches for you for at-the-money covered calls that you can change this criteria on the fly at any time to create your own search, or if you want to go in the money or out of the money, and of course weekly covered call screens as well. We'll talk about that in a moment. Remember what I mentioned earlier, that on Friday we had a customer who had a specific requirement for his covered calls. He wanted to see covered calls 3 to 4 months out in time that offered at least a 4% return with just the covered call itself on stocks that paid a high dividend. Okay? That is easy enough to create. We give you the flexibility here and the quality for a variety of different option criteria. If you're focused on implied volatility for your strategy or looking for overvalued or undervalued options, it's there. If your focus is more on higher downside protection or higher percent if assigned, you specifically want to go a certain range in or out of the money. If you want to focus on your premiums, your probability, Greeks as well, delta and more, and of course liquidity. And then you can focus on what you'd want to see for the technicals and fundamentals as well, all on the same screen. But let's take a look. What this customer wanted was specific. It could be done with 5 clicks. First click, clear filters up here at the top right. That empties everything out of our parameter field. What were the requirements? We wanted to look for positions that were 3 months to 4 months out in time. So I'm going to select all expirations available, and let's go 85 to 130. They wanted a minimum premium, return if assigned, or minimum premium against the stock price of 4%. So I just put that in there. So 1 click, 2 clicks for percent if assigned, 3 clicks for downside protection. And then we wanted to look for stocks that paid at least a 6% dividend. So let's go to fundamentals. Here, in addition to limiting our stock price, putting in fundamentals for earnings per share growth, PE ratio, price to book, market cap or more, put in dividend, just want to put in 6% or more. So let's go ahead and submit that very quickly. In that brief moment, we narrowed down the entire universe of options to only 79 trades, the 4,000 optionable stocks, indexes, and ETFs, to only 79 trades that match that criteria. But of course now, we see that there are different expirations available, 120 out to October and 86, which is September. So how do we narrow this down further? Well, very simple. If you want it to be out of the money now, to potentially have a lower probability of getting assigned, maybe keeping the stock, we'll just put in a range out of the money, let's say of greater than 0. We just want to see the out of the money positions, not the ones that are already in the money. Let's take that down. Now we've got 38 total results. And I can further narrow this down based on any fundamentals I want to see. We've got $10, $20, and $40 stocks here, but if we wanted to make sure everything was between, let's say, $5 and $90 per share, put that into the stock price as well. So we can customize it, adding one filter at a time to continue to narrow down our results. I would also start adding in things for stocks that had positive earnings per share growth maybe, or were trading in an uptrend to look for that also. All Earlier we talked about why options investors use different services. There are services out there that give you a list of stocks to screen against, or you maybe already have a list of stocks that you prefer for your given strategy. Maybe you've traded over the past 6 or 7 years. You know these stocks. You know how they perform. Maybe they're all blue chip stocks. Maybe they're part of a list you got, or you've done your own research. This tool allows you to quickly narrow down the universe of options using basic criteria, but the criteria that matter to you. This particular one we saw with 5 clicks only, how we narrowed down the universe of options to find specifically covered calls that matched this investor's requirements. It's very simple to use, although there's an additional 30 options criteria I could set, 20 to 25 different stock technical criteria I could set, as well as fundamentals. You want to focus on what's the most important to you. Put in your 5 or 6 main criteria you're looking for in a strategy. You'll automatically cut down the universe to a manageable list, and then you can customize it from there. You're not bouncing back and forth between a stock list and then a spread view, one stock at a time. Everything that comes up in these results matches specifically your needs and your requirements. And of course, if you do just have a stock list, or you don't know what you're screening for, you can go into the list field, you can create your own personal stock list and screen just against that for the return, expiration time frame, and more that you want against your required stocks, or you can choose one of our defaults. We give you lists that you can use if you just want to screen against Dow 30 Industrials, IBD lists, S&P 100, the S&P 5-star lists as well, NASDAQ 100 and more. So let's say you're interested in covered calls and you're just getting started. You don't know what to look for, but you were promised maybe something that you could get a 3 to 6% return per month trading covered calls. That's your target, let's say 3% or more. You know you want some downside protection. You want quality stocks, but you don't know what a quality stock is per se. You might have some requirements, and you might have some stock requirements just based on price alone, not fundamentals or technicals. All right, so let's do that again. Clear filters. Let's just go standard July expiration. You can screen for weeklies, of course. We're just going to go standard July expiration. Minimum return if assigned is 3%. Probably want about a 3% downside protection as well. I could leave that out, but I'm going to put it in. And you want to have a good probability of being assigned and earning that 3%. So let's just find the probability. It's right down here, the price and strike price fields. You want at least a 65% probability or more. I could go 70 to 75. That means I'd be deeper in the money and wouldn't have a return of 3%. But you don't know what stocks to look for. You know your price range. You're not going to trade stocks higher than $120, let's say, or $100. So let's limit the stock price range, 5 to 100. And then I'll go to the list field, and I can choose a bullish list. So let's say I just want to look at the S&P 5 stars. These are stocks that are rated a 5-star buy by Standard & Poor's. Let's go ahead and submit that. So what did we do? 1 for expiration time frame, 2 for the return, and downside protection is 3. Probability is 4. Stock price is 5. And S&P 5-star list was 6. With 6 clicks, I narrowed down the entire universe of options to only 1 position. Now, why is it so low? Why am I only seeing 1 position that matches this criteria? You'd think there would be more. There are. But the problem is, with selecting an S&P 5-star list, which is looking for quality stocks which have lower volatility, your expectation for return, even for a 30-day out trade, probably have to be lower. So let's open it up. Let's narrow these two down to 2%. I know that might not match your trading plan, but let's get it a little wider here. There we go. Okay, so now we have 8 trades. All of them 5-star recommended stocks by S&P. Well, the Cliffs Energy one is still in there, of course, with the one that offered the return, but here's Skechers at 2.9%. And now you can do your further research and analysis, take a look at the stock chart, company information, and more. but you know this stock is a 5-star recommended stock. We recognize all the names on here. Tech Resources might be the only one that I'm unfamiliar with. WPX Energy I have heard of course, but Tech Resources is the only one I haven't heard of. Why aren't there more stocks in here? Why aren't there more covered call opportunities? Because I wanted this high of a probability. To get that high of a probability on quality stocks, we've got to expect a lower % return. Let's talk about our friend who was looking for bull puts. Okay, let's go into the search screen here, and we'll see the exact same setup. What do I want to do when I enter into a bull put credit spread? Well, I want a leveraged return on the position. I want to have a good double-digit return, even for a 9-day or 10-day trade, perhaps. I want to be out of the money and have a good probability. And just like a covered call, I want to look for bullish stocks. Here's our default screen for the weekly bull put credit spreads. And as I scroll down again over here on the right-hand side, I can see the active filters that are being used for this position. Important, no earnings between now and expiration, which is what we also might want to set for our covered call trades. Okay, so with only 9 days out, we have 14 trades that are offering at least a 5% return with a minimum net credit of 15 cents, and all have a probability of 70% or higher. Does this match your needs? I don't know, but it's a starting point for weekly bull puts. Now here's a common question I get. Let's take a look at this criteria just for the options to start with. Here we're looking for all expirations, standard and weekly. We've set our time frame to be between 8 and 17 days. Minimum net credit we talked about, minimum return as well. Want to be out of the money for protection and want that probability of 70% or more. In the technicals, we've set things as along the lines of looking for stocks that are in an uptrend, and another technical indicator where the stock has had a MACD positive crossover within the last 3 days. You can also screen for volume, percent of 52-week range, RSI, volatility for the underlying security, and implied volatility for the options as well. But it's all done on one screen. So I'm looking for stocks that are in an uptrend, have shown a positive MACD for at least 3 days, matching the returns that I want. And of course, I could set other fundamentals as well. Stock price isn't really important in this case because we're using a strike difference, and we can set the strike difference as well. But you want to avoid stocks that have an earnings date between now and expiration. And you could set market cap, price to book, other things that you want also. But the first question that gets asked is, this is a weekly spread. Why are you looking 8 to 17 days out in time? Anytime you pull up a default search to use as a stepping stone, you'll see a description here that we put together. This was criteria that was actually tested over a period of time to see which criteria and structure would give us a reasonable and expected and target return for this strategy. And what's interesting enough is what we found when doing this testing for bull put credits and bear call credits, both of them actually with weekly searches, is that long term, over a time horizon of a couple years or more, when they were made available, using options, the 2-week out options actually resulted in a higher overall return than selling week by week by week. Why? Well, you can search for weekly options, those that expire just 3 days. We're going to look at that in a moment. But you know that if you go in a shorter term, you get a lower premium. In any strategy, you're going to have losses. That's where the rest of our tools come in, the portfolio tools to help you track, manage, evaluate rollout opportunities, not to mention our various education on management techniques on the various strategies in the archive webinar section. Because no matter what positions you look for, during some months you might have a 95 or even a 98% success rate. Covered calls got assigned at a 95% rate. Your 95% of your bull puts, your bear calls expired worthless as you hoped. But that's not going to consistently be your percentage over time. The criteria that did work for you with the market in mind 5 months ago might not be the same criteria that worked for you 5 months down the road. And what we saw is that when using the 5-day out or 3-day out options, if you're searching on a Monday or a Wednesday, for example, what ended up happening is that the lower premium, 10 cents or 5 cents or so, when you did take a loss, it wiped out 12 to 15 to 20 previous trades. Going 2 weeks out allows us to get more along the lines of that 20, 30, or 40 cent net credit consistently, so one loss of 2 points might have only wiped out 5 trades. So that's why it's set. But again, let's talk about our friend on Friday who was looking for a specific screen. He wanted to do weekly credit spreads. So we're searching today. I want to look for credit spreads that expire on Wednesday. I'm sorry, expire 3 days from now on Friday. And have a 90% probability and a minimum 15-cent net credit. Easy as pie. Let's clear the filters one more time. Empty everything out of this default parameter field, but I can always go back to this default search or any of my saved searches at any time. We're going to go 0 to 4 days out with our days to expiration. Minimum net credit of 15 cents. Probability greater than 90, so 90% probability the stock would stay above both put strike prices, the spread would expire worthless, we'd have the max return. I'm not going to worry about return because we had a requirement of 15 cents with a 90% probability. That's going to be tough enough to find on its own. And at the same time, let's just put in some basic liquidity. All right, let's go ahead and submit that. Now, we're looking for 2 days out in time. There are about 465, I think, securities, indexes, ETFs, and stocks that offer weekly options. So we've narrowed it down to 70 results, and there's some repeated, Accenture, Oracle, and more. Now, I see already 4 actually, wow, 4 positions on this list that I know have earnings coming up between now and expiration. I know that because I'm actually trading weekly long straddles against those positions looking for a bounce one direction or the other. So there are 70 potential bull put credit spreads that expire on Friday that offer at least a 90% probability. But to be safe, I told you that I could show you 5 positions, or with 5 clicks, 1 for the expiration, okay, 1 for clear filters, 2 for the expiration, 3 for the net credit, 4 for the probability, all right, 6 for open interest and volume. But I'm going to add 1 more for safety, and what's that? Let's go to fundamentals. Earnings date not between now and expiration. 53. All right, so we've taken down some of those. Adobe just had earnings today. I know that because I was in a straddle that didn't pan out as well as I wanted to. It was profitable, but not much. But in any case, even SPX appears. You're scanning against the entire universe of options for your specific requirements for options, technicals, fundamentals, or if you just wanted to create your own stock list and screen against those for bullish or bearish positions. Okay. Steve posted a question. He said, hopefully this is being recorded. Of course, Steve, I am recording today's presentation. It will be posted later this afternoon. I'll let you know when it's available as well. All right, so the married put screen and the collar screen, well, I would suggest just using the default search that's already available. I go to married puts, and these are the criteria that we use for radioactive trading, going at least 5 months out in time, but you can customize it. This is your stepping stone. Take this list of 17 results. I see some high-priced stocks in here, Alibaba and more. First thing I'm going to do with a covered call default search, a married put or a collar, you know your account size, I know mine. I know that in general, I see here the stocks between $9 and $200 per share. I don't typically buy a married put position or a collar unless with stocks above $75. So that's my first adjustment. And there we go. To tell you the truth, tomorrow at 12 noon Eastern Time, I'm going to be hosting a webinar for just Blueprint owners, the full manual of radioactive trading, and Fusion subscribers. And I know I'm opening a new trade tomorrow for our Fusion members and Blueprint owners. I'm going to show them what trade I'm selecting. And looking at it right now, I think my top 2 were going to be C-Trip and Grubhub. Best Buy is interesting because they just had earnings recently, but they pulled back after that. But these are the lists I trade from. This search for Mary puts is what I trade from in my personal account. This is the selection I trade from with a couple different adjustments to the position as far as the stock price and more. Okay, so if you don't know what you're looking for, you've heard us talk about limited risk trades, that's the search you're going to start with, and then you can make adjustments to the stock price or the risk level based on your needs. What's a common thing with long call investors? 10% of you or so, we haven't talked about those in the search criteria yet, but 10% of you want to trade long calls. You're probably looking for something that has shown an increase in option volume because you want to follow what some people call the heat. Okay? Well, I know there's a service out there, very respected gentleman created it, that uses what's called the heat map, or it's called the heat scan or the fire scan. I forget what he calls it. And nothing against his teaching and his trading, but what his tool does is shows you options that just have the highest option volume. Okay, but it could be calls or puts, and I've heard rumors, and I haven't verified this yet, but I've heard rumors that that particular heat map or heat target, whatever it's called, looks for option volume, the highest option volume increase in the day, but not differentiating between selling and buying. Okay, now our tool doesn't do that either. But the problem is if I see an increase in call premium, or call volume, excuse me, a high percentage jump in call volume, and I don't know if it's buying or selling, if it's more an increase on both naturally, because you have to have a seller for a buyer, but people could be selling that more to take a bearish position, or as a covered call, which is really neutral to slightly bearish if you think about it. It's a little bit bullish, but it's really more neutral. May not be a signal of a lot of movement, okay? But again, we go into the long call search. You're interested in buying calls because you want to use leverage. You're not sure on spreads yet. You're level 2 trading. You know you can trade long calls. So you want to look for positions that are poised for a breakout or maybe have an increase in option volume. No problem. We've got two default searches set up for you. The Bollinger Bands one here, it's looking for stocks that are near the high of their 52-week range and are right at the top of their Bollinger Band, usually sees a breakout. But at the same time now, we're looking for only those options which have shown an increase of percent previous option volume. But if you wanted to specifically target options today that have a high volume, let's say at least greater than 100, I'm going to say just for weeklies even. I'll go to weeklies, 3 days out, looking for ones that have a high option volume today and maybe a high open interest, at least 500, but where the current option volume is greater than 200% of its 90-day average. Okay, and what I'm going to do here is also limit it to just sort of at the money. Okay, so we're going to go no more than 2% in the money and no more than 2% out of the money. And I'm also going to look for one result per security. Okay, I'm not going to look for anything else. This is just finding you high option volume calls, 16 results. This doesn't surprise me. I saw on the news today that the biogens are really taking off. And it wasn't because of earnings. Okay, the pharmaceuticals really jumped today. So you see Biogen and even the iShares Biotechnology ETF. FedEx, high option volume, well, they just had earnings today, as did Adobe, the one I mentioned I was in, as well. But Intel, Pfizer, Twitter, all showing increases in option volume. And for a 2-day out trade, you see that there have been some jumps on these particular ones. Celgene, of course, Amgen, all in the biotech. So maybe we missed it, but again, this is where the heat is, and it took me 4 clicks to do it. And if you wanted to go to standard expiration, we could change that as well. So we just go to July, 30 days out, we'll probably see almost the same list. Adobe, FedEx, all the volume is increasing on all of these securities. DuPont's an interesting one. Okay, they have an increase in option volume also. But as before, remember, any search criteria you want. If you want to look for credit spreads that have a certain probability with a minimum net credit, minimum return requirement, you can put that in with just 5 or 6 clicks. Covered calls on dividend-paying stocks, we already showed that as well. Maybe you're a contrarian. You want to look for cash-secured naked puts where the stock is trading at, let's say, below 20% of its 52-week range and is dropped below the 20-day moving average and is trading near its bottom, or what you think might be the bottom, because you think it's got to go up from there and you want to trade at the money to maximize it, that's easy enough to do. Let me go to naked put very quickly. I don't recommend doing this. It's not how I trade. But let's say we're contrarian. Okay? I'm going to look for 14 days out. So all expirations, I'm going to go 5 to 14 days out in time. This will focus to next week, the 9 days out. Well, of course, I'm going to want a minimum naked yield of probably at least 2%. Let's go 1.5. Okay, so that's my return on the investment. I know I want to be right at the money. Right? So again, I'll look at the percent range in the money, no more than 2% in the money and no more than 2% out of the money. Okay? I want to see some volume and activity, but what's most important? I want a stock that's down near the bottom of its 52-week range. Okay? Technicals, percent of 52-week range, let's go less than 15%. It's near the bottom. The Bollinger Band, I'll show you what this is in a moment very quickly, but typically if I'm looking for bullish stocks, I want to see stocks that are trading near a high, near their upper Bollinger Band, or maybe have just broken above that band. So I'd look for 100%. But if I want stocks near the bottom, we're going to look for less than 10%. Okay, and I had mentioned I wanted a stock to be in a downtrend, so stock below the SMA 20. And as before, just to avoid any sudden drop in price that unexpected, where this naked put, the stock drops 10-15% because of poor earnings, again, we'll avoid stocks that have earnings between now and expiration. Let me see if anything is here. Okay, I'm not going to limit stock price right now. Let's just see what's here. Oh, well, I've got some ETFs in here on the drillers. That makes sense. But I've also got some 2 times and 3 times ETFs in here. By the way, I've narrowed it down with just those few specific criteria to only 30 results. That's fantastic, because I remember out of the 480 or so indexes and ETFs, we only have 30 results. But I want to do something here. I want to look for straight stocks. So I'm going to go to our list field again. And instead of including a specific list, I'm going to exclude indexes and ETFs. I don't want to see any of the 2 times bull or bear ETFs, or even any of the ETFs that are struggling right now. Let's go ahead and take those off. So you can include a specific stock list, exclude a specific stock list, or even exclude a specific, my apologies, a sector or industry. So I've taken it down to 23. JCPenney, that's not surprising. Probably don't think that one's going to come back. We've got the gas ones in there as well. But what do I mean? What am I looking at with these technicals? Let me just take TripAdvisor. It's a nice $35 stock. Let's just see where we are here. We're going to go to big charts, part of our analysis. I'm going to go to a 3-month chart to make it easier to read. Okay, a little bit more definition there. But I'm keeping the Bollinger Bands, MACD, and more. All right. So here's the Bollinger Band. We see a stock that has climbed below its 20-day, broke below the Bollinger Band. This is our lower band. We know we're in the lower 20% of our 52-week range. Hey, we already saw that. It's from 71.69. We're at the new low of this position. MACD here, this was the bearish crossover. See that decline there from 46 down to this price here. We're at 35 already. It tried to come back a little bit, almost got to the 20, but then continued to fall. So we've got that negative crossover again, this time below the signal line. Now, I don't know if this is bottomed out, but what I just showed you is a simple way to look for positions using the Bollinger Band. Stocks that are trading near their bottom band in their lower 52-week range. So if you're a contrarian and you think that this would be a good opportunity for an at-the-money naked put because your analysis and research over time shows you it's going to come back up, that it's not going to go lower, that might be a good trade. But it's simple to do. I personally go the other way. I tend to follow the trend, so I'd look for covered calls or cash secured naked puts on stocks that are above their 20-day, near the upper band, have shown good growth, of course, and also have a positive MACD crossover where the MACD is also positive above the signal line. That's my preference for bullish positions. And you can see my description of what I look for, by the way, for bullish securities. So maybe you don't want to use a stock list, Maybe you want to use a set of criteria, but you don't know what to do for bullish and bearish. Go to our free webinars page at any time. I'll send you the link right here in the chat window. It's www.powerop.com/webinars.asp. Okay, let me go ahead and send that. In our option strategy section, well, I show you what criteria that I recommend for calendar spreads, selection criteria for buying call options or buying put options. Okay, so you can see there what I'd set for bullish or bearish criteria using the Power Options tools and what makes the most sense. But it's also strategy specific. You have introduction here and management on naked puts, covered calls, vertical spreads, and more. And in the options concepts, of course, there's some other discussion you'll see here on Greeks and implied volatility, as well as more. But there's education here in addition to the tools to find the new trades you're looking for. Whether you're a spread trader, whether you're trading covered calls, whether you don't know what you're looking for, whether you're looking one stock at a time, whether you have a specific requirement for search criteria, all of that is available for you in one set of tools. Looking for positions individually, looking for positions across the universe of options that match your criteria and your trading plan, but rather than finding a list of stocks and then trying to go to a straddle chain for that particular stock, a buy right chain for that particular stock, this can be done all on one page to help you save time with your research and analysis and quickly just identify those positions that match your personal risk-reward tolerance. All right. So remember, a quick review on Power Options. What I feel personally are the best tools for finding new trades because of the quantity of filters and trades available, all expirations, all indexes and ETFs in the U.S. markets. That's what we're showing you. No limited search list or anything along those lines, but the quality of the criteria as well and the flexibility to do all on one page. But if you are looking for one stock at a time, remember that search summary tool. You can select to do bullish or bearish trades based on your sentiment to compare the returns of the different strategies to see which one best match your needs. You're doing covered calls, I recommend using the option chain as well as naked put. You can customize it and you can see specifically which criteria that you want, the naked yield, the percentage return, much more data than you'll find on any free service, Google Finance, Yahoo Finance, or more. When you're doing bearish, bullish, vertical spreads, I recommend using that spread chain. It's a real simple interface. You put in your stock, you put in your expiration time frame, and then you narrow it down based on what return you want, probability you want, and maybe even strike difference or range out of the money. You can isolate it to only those few trades using the midpoint spread chain there to see which ones best match your needs, and at the same time, compare it to the parity view. It's possible the bull call debit might give you more bang for the buck than the bull put with the same probability and risk-reward profile. Those of you buying options on a particular stock, why would you buy a call or put on a particular stock? Well, it's because you have a bullish or bearish sentiment. You know what's going to happen going forward, or you expect what's going to happen going forward. That's the long option finder. Put in your specific stock, your target price, and your investment amount in an instant. We saw which long calls would give you the best return if the stock hit your target price on your target date. You don't have to go back and forth to a Black-Scholes calculator from each strike available on a chain to see the best return. We're going to do that work for you. And then, of course, the married puts and the collars we walk through using the search by symbol. Okay? All right. Now, remember, of course, at any time, starting off with the searches, one thing I didn't mention, actually, that I should go back and mention, I apologize, we talked about setting up the search for your needs. And we talked about if you don't know what to do, there are stock lists available. But what about, as other services offer, but we know the backtesting results, and Ernie actually puts these trades in, for covered calls and naked puts, there's a tool called Picks of the Day, both for weekly options and for monthly options. Let me go back real quick. I do apologize. I should have shown that before. So I'm in a covered call. I'm not sure what I want, but I maybe want monthly trades. Well, I'll go to the monthly picks of the day. This is showing me the top 2 or 3 results for standard July expiration that match a tested criteria that Ernie used. He went through many iterations on covered calls, putting in what he thought would work, what he found out did work that he was surprised with, and tested this strategy over time. And what we're showing you here with just this quick view are the top 2 choices for the monthly or weekly picks of the day. And at any time you can further research those here, see how we develop these results. This gives you an entire description of the process Ernie went through, the time frame of his testing, and he selected a time frame that was both bullish and bearish, and of course, what did he see as far as his returns using each of the different selections, the monthly, weekly picks of the day, and the weeklies as well. So again, maybe you want to trade covered calls and naked puts, you haven't been having success, maybe you've played with the criteria and haven't found anything that you wanted yet to show you a good return over time. Take a look at what's offered there for the monthly picks of the day and the weekly picks of the day. See how this performance compared to your performance over that same 1-year time frame. And this might be something that you can discuss or consider using in your portfolio. And in addition to that, Ernie actually also discusses what he used for exit strategy in the historical testing tools so that you can use that also as part of your trading. Okay, and that's how he managed those results. So he's sharing with you, of course, what he used for those results in there as well. But with the search alone, the covered calls and naked puts, you can clear the filters if you have that set of 4 or 5 criteria that are major requirements to you. We showed 2 examples of that. For vertical spreads as well, clear the filters, put in your specific needs for probability, minimum return, price ranges, technicals or fundamentals, put in those first 5 or 6. Don't worry about the other 30 or 40 criteria that are there. Get your list and then you can narrow it down further, 1 criteria at a time. Okay? All right. Now, basic tips, of course, we always review this using the search. You can start off, if you don't know what to use, with the default criteria or the sample searches in any strategy and use that as your stepping stone. You'll be able to see the active criteria that are being used on the right-hand side of the parameter field there, and you can make adjustments on the fly. But when making adjustments, as I did when we were trying to narrow down that spread search a little bit more, it's usually best to just put in 1 or 2 filters at a time on top of the original sample search or the default search there. So I put in 5 new criteria that I wanted on top of a limited list of only 30 trades available. And I run my search and I get a message that say, no stock or option criteria match my needs. I don't know which one of those filters really narrowed it down too much. So you usually want to do just 1 or 2 at a time. And don't ever feel overwhelmed. We do offer the flexibility and the quantity, but remember, you don't need to put something into every one of the filters that are there. I encourage you to learn them. If there's a filter you don't know what it means, you can hover over that in the parameter field and it'll give you a definition, something you might want to incorporate in your searches later on. But at the same time, start with what you want, because you have the flexibility with these tools to put in your specific requirements for not only the option return, premium, and specifics you want, but at the same time, the stocks that match the sentiment for that trade, the technical and fundamental criteria as well, the chance to avoid things such as earnings or ex-dividend dates if that's relative to you as well. All done in one search, all with a few simple clicks, and you see the results in just a matter of moments. Okay? So when you want to create your own search, don't start with a sample search. Just hit clear filters first, input the settings that apply to you. We saw that when we ran our search for the covered calls, and Cliff's Natural Resources was the only one that came up on the S&P 5-star list that had a 3% return. Well, that might be a good trade. We wanted to open it up to a little bit more. I don't want 100 trades shown me. That's not going to help me save time. I don't want 80 trades. But I lowered the return a little bit to make it less restrictive. We had 8 total potential covered calls for July. They're part of the S&P 5-star list, offered at least a 2% return and the 2% downside protection. Okay? And after you've done your search and you have the results you want, you can always save that search. So you don't have to do it every time. You save that search and you come back in, and that's available for you. We showed you how you could screen and we could limit out the indexes and ETFs in that list field. You could also choose to screen just against indexes and ETFs for particular strategies. But remember, you may want to choose to exclude inverse ETFs as one of the lists or leveraged ETFs. Doing a bull put credit spread or a bear call credit spread on a 2 times or 3 times ETF, 2x or 3x ETF, is going to give you a good return. But remember, it's giving you a good return because they're more volatile. They tend to move very, very quickly. Okay, so it might not be the best idea for a neutral to bullish position if I can find a position that matches my return and my trading plan on a standard ETF that's not as volatile. And of course, dividend stocks, we already showed that, how you could put in the limit that you want for dividend percent range, whether you're doing cover calls or looking for collars or married puts as well. And why is it all important to have all of this available on one screen? Instead of bouncing around between a stock list and then looking at a strategy chain, or starting with the strategy chain and then going into different stocks one at a time. You'd rather see the entire universe of positions at once that match your market sentiment for the particular strategy, the time frame that you desire, whether you want to be weekly, monthly, or longer term, and putting in the realistic expectations. If there were positions that had a 90% probability with a 1-to-1 risk-reward ratio, as we talked about earlier, that tool will find it. But don't expect to find them that often, because everything goes hand in hand. And if you run a search, of course, and you end up with no results, something doesn't look right, and you say, hey, this should be in here, that's when customers usually give me a call. It's usually a hidden filter they forgot about that's narrowing out the stock they thought would appear in their list, or the criteria themselves don't match. If I saw someone who wanted to go 10% out of the money on a naked put with a 90% of expiring worthless, but wanted a 10% yield for a 10-day trade, I know nothing's going to match that. Okay? You've got to be less restrictive. It would be great if it was, and again, if it's there, these search tools will find them. But if it's not, it's because it's that easy with a 90% probability, 10% out of the money for a 10-day trade with a 10% return. I think everyone would be trading it. All right, now remember, those of you who haven't yet, go to PowerOp.com. Just put in your name and email address and click Start My Trial. You'll get a 14-day free trial of these tools to find new positions in your strategy. And we'll be able to work with you to, of course, help you set up the trade based on your needs in your given strategy as well. We have subscription services starting at $40 per month. That's for the end-of-day data, but it doesn't include the picks of the day. But the 20-minute delayed service at only $60 per month, discounted rate of $660 per year, does offer you the picks of the day, plus access to all the searches and the signature tools for looking one stock at a time. And we do offer real time as well. All right. Well, if you have any questions about what we showed today, about the capability of the search tool, and why I personally feel, or you want to have a discussion on tools that you feel are better, I'm open to it, of course. You can send us an email at any time to support@powerop.com. Those of you that are current subscribers or trial members, remember you can schedule a coaching session at any time. And that's just essentially a 40 to 45-minute phone conversation with myself or Ernie. We'll walk you through the tools on the site and answer any questions that you have. Or you can just call us anytime. You can call us during market hours at 877-992-7971. If you live outside the U.S., you can reach us at 302-992-7971. So again, why I feel they're the best tools to find new trades? Because the quantity of criteria that's available to you and the quality of the criteria that's available to you in any search for any strategy, and the flexibility. If I grab 50 investors at the CBOE, put them in front of 50 computers and told them show me your best long call search to identify positions, I'm going to get pretty much close to 50 different searches. Everyone has their own idea of what the best trade is. And some people do better than I do at trading. I'll admit that freely. Some of my Power Options subscribers are very profitable in strategies I don't trade because they don't match my risk-reward profile. But again, the tools are set up, and we've set sample searches and default searches based on our knowledge and what investors look for regularly as a stepping stone You can make adjustments to those searches to match your particular needs, or if you just want to look one stock at a time, we've got powerful tools that help you narrow down the universe quickly with various criteria rather than seeing a large list of potential spread trades where you have to filter through which spread on Apple has the probability you want, the return you want, and the strike difference you want. You can narrow all that down using individual tools such as the spread chain or the option change for the covered calls. The long option finder see which calls or puts would give you the best bang for the buck based on your expectations. And the searches, again, instead of going from a stock list to look at a strategy chain or a strategy view and seeing maybe the one or two positions that someone recommends for you the best, you've got it all available to you on one screen to input your option criteria for your trading plan, the stock criteria you'd want to see to match the sentiment, avoiding things such as earnings or other risks, and technical indicators to look for better trends. All on one page, 5 or 6 clicks of the mouse, input the criteria that match to you. You've probably already cut down the universe of options to only 10, 12, or 15 trades that match your needs, not someone else's, not someone else's preferred stock list that may or may not have worked over time. You're in control, and we give you the tools to be in control of your trading. Ladies and gentlemen, thank you for joining me today. I hope you have a fantastic trading week going forward. And of course, going into weekly expiration, you'll see some of them emails coming up about other webinars we'll be hosting within the next weeks. I hope to see you there as well. Take care, everyone. Good night.